So Ross Company chart of accounts, there's a couple points for you. So if even if like you're a little lost, that way you at least can like have those points as well. So the next thing you do is you're going to separate them by balance sheet accounts and income statement accounts, because you want to show like what's in on each financial statement. So you have your balance sheet accounts and your income statement. So it's really important when you're doing this to make sure you have your titles for each section, so that the reader knows, okay, this is where I find all of the assets, this is where I find all of the liabilities. So the first list of accounts here is where we're going to identify the assets. So the first one is cash. We always want to list cash first, because that is the most, cash is king, and you want to list it first so that it's going to have the lowest asset number. But we'll get back to the numbers in a second. Leave a little bit of space next to your account title, like right here, so that you can write in the number after, okay? So we've got cash. I'm going to write in the book just to be a goober, but we've got this one's an asset, supplies is an asset, capital, oh, nope. Prepaid insurance is an asset. And accounts receivable Tyler Link and accounts receivable Megan Alvarez is an asset. All right, so the next thing you're going to list for the balance sheet is the hold on, I just totally messed myself up. Is the accounts receivable, because accounts receivable can be converted to cash more rapidly than the rest of the assets. Like, you can't convert supplies to cash as quickly as you can your accounts receivable, in theory, if they're paying like they should. So when you have two of them, two accounts receivable, that's when you start to alphabetize them. So you've got accounts receivable Megan and accounts receivable Tyler. Megan would be the next one. Oh shoot, sorry, right here. I zoomed it, Megan. Thank you for telling me you guys couldn't see it. So once you move through your accounts receivable, then you're going to start going through your supplies and your prepaid insurance. So supplies can be converted to cash faster than prepaid insurance, because prepaid insurance is a contract. You are contracted with the insurance company to pay a certain amount and use a certain amount per month. So the next asset is going to be supplies, and then prepaid insurance. So I have all of my assets. Actually, I'm going to just adjust this a little bit. All right, so once we have all of our assets listed down, we want to look at what our liabilities are. So looking at this list of accounts, guys, we have accounts payable, Sure Supplies, and accounts payable Mid-City Supplies. These are both liabilities. They owe us money. And then looking at the rest of these, there are no other liabilities here. So it's going to be it's going to be accounts payable. Oops, sorry. All right, so you only have two liabilities. The last thing we do is our owner's equity. So owner's equity is only going to have 3 accounts. In this activity, in this assignment, you've got Clara Ross drawing, that's a capital account, and you've got Clara Ross Capital, that's a capital account. And there is an income summary account that we use, but I'm not going to have you put that on there, okay? Because it's not listed. So we've got our owner's equity. And this is a 300 account. So we'll get that there. Clara Ross. Drawing. All right. So by going through this exercise, we have identified all of the balance sheet accounts. These are all the accounts that will live on the balance sheet. Now, these are what called these asset and liability accounts are what's called permanent accounts. They don't ever close out. Their balance is continually changing and being added and subtracted from over the course of the life of the business. They're not temporary. A temporary account means their balance only pertains to the current financial period. It's not like you're going to see a transaction for 2024, a transaction for 2022 and 2024 in a temporary account. But if I were to, open up the ledger for accounts payable, I might see it go back the whole history of what they've ever done with us, okay? All right, so we've got our balance sheet accounts. Now we're going to do our income statement accounts, which is pretty much everything left over. So the first thing we want to do is we want to have what are called our revenue accounts. Our revenue accounts are our sales accounts. Now, for the purposes of this class, we always have at least one sales account. As you get out into the world and see more like detailed accounting, some companies will have 5 sales accounts. They might have 10 sales accounts. It all depends on what they're trying to track. Because really all this is a method of tracking how much we sell for our company. So for instance, like if I'm a landscaper, I might want to have a sales commercial, a sales residential account. That means I can track how much I did in sales for my, businesses that I mow lawns for, or maybe I want to keep track of how many families I mow lawns for. And that just helps make decisions later on when I'm looking at my financial statements. Okay? And I'll show this in its entirety at the end, but yeah, I'll give you a second to write, okay? So we've got our income statement, we have our revenues, and for this activity, we only have one sales account. So we're going to move on to our expenses. So looking at our expenses here on the page, this is going to get embarrassing because I'm probably going to mess up my alphabet. But we have our sales, so that's a revenue account. Now we just have to look at what we have left for expenses and put them in alphabetical order. So the first one's going to be automobile expense. Auto expense. We've got, so that's expense. What's the next one? Insurance. Insurance expense. We have miscellaneous expense. Supplies and rent and supplies. See, I told you I was going to mess it up. All right, so I'll show you this in a second just so you can keep writing, but I have successfully gone through and recorded all of the expenses on my chart of accounts. So this is what all the account titles look like. You'll notice that the expenses are in alpha order. And then our balance sheets are in liquidity here, and then alpha here. Okay. So you'll notice that on the space before each account title, I have left a space for the account numbers. So the account numbers tell us something. The account numbers tell us what type of account it is just by the number that we start with. So you'll notice at the top of each of my sections, I put a number in parentheses, 100, 200, 300, 400, and 500. If you think back to that activity we did a while ago, that big, huge chart paper, yeah. So this is kind of like a similar thing. This is a little bit of a review for you today as we move forward in this class. So cash, we're always going to do this by tens. So cash is 110. Accounts receivable is going to be 120, 130, 140, 150, okay? So if in the future I decided, okay, you know what, I want to add another accounts receivable account because Courtney owes me money and I need to keep track of that. So I'm going to now have 125 accounts receivable Courtney. Like I'm going to have room in there to put another account in. It's pretty easy to do it that way. So for liabilities, it's going to be the same thing, except now we're starting with a 210, 220. Owner's equity is 310, 320. Now, if I had more than one owner, I would just keep adding by tens. So if like it's me and Colin own the company together, I might be 310 and 320, and he might be 330 and 340. Like it's not a super huge deal.
What does this number on the slide say?
Right here?
Yeah.
Liquidity?
Okay.
Thanks. Because if you can't read it, I'm sure somebody else can either. I'm sorry, my handwriting's a little trash. Alpha?
Alpha?
Yep. So alpha for the liabilities and alpha for the expenses as well. So for revenue, it's going to be the same thing. We're going to just do 410, and then expenses is 510, 520, 530, 540, 550. And this right here is our chart of accounts. What's up, kiddo? No, I don't. Miss Bromley or Mr. Shellen might have the file. That's a spare Chromebook. Yeah. All right, so that is preparing a chart of accounts. If I said to you, okay, go on to the next section and do, part 4, or excuse me, the purple part, 4-1 on your own, down here, you would go through that same exercise for Rowan's hair care, okay? Now, if we are going to add 2 new accounts, postage expense and utility expense, we're going to, oops. Why are you being weird, computer? I don't know how to. I hate technology. Okay, it's kind of clear. All right, so we're going to add 2 new accounts, postage expense and utility expense. We're going to assign 2 account numbers, okay? So we've got postage expense and utilities. So postage expense would go in over here, and remember it's an alpha order, so we're just going to insert it wherever that falls with the alphabet. So it's going to go between miscellaneous and rent expense. So miscellaneous is 530 and rent expense is 540, so we're just going to do 535. Okay, and then utilities goes at the end, so we're just going to add it as 560 because we're increasing by 10 and we're doing it right at the end after supplies expense. Okay, so what's up?
I was just going to say, will there ever be like more than one account that we have to kind of insert in the same place, so we have to like split the numbers or something?
Yeah, you might do like 535 and 536.
Oh, okay.
Yeah, it's just when you're like, yeah.
Yeah, that makes sense.
It's just you keep it even until you can't.
Yeah.
Yeah. I mean, when I have worked at other places, I mean, our chart of accounts were longer. They had more detail to them. Like they all started the same way, but like with the 2s and 3s and 4s. But they had like more indicators of what you were using it for. It might have like, oh, if it has this number and this space, it's for this part of the casino, or if it, that sort of thing.
Yeah.
Mr. Mooney, what are you saying? You can't see it.
Oh, sorry. I'm trying. What was the question?
What do you have written in this?
535 postage expense. I'm trying to fix it. I don't know why it's being so dumb. And then 560 for utilities expense. Why? Oh, there we go. Ish. All right. So then what we're working towards in this class is we are working towards taking everything that we did in the 5-column journal, which is one depository of information. You can't really make any decisions based on the 5-column journal. You have to take that and then put it into what's called general ledgers. So general ledgers, as you saw in the study guide, which I will hand back soon, as you saw in the study guide, there was like the 5-column journal and then there was individual accounts, right? Those individual accounts are where we start to be able to make our decisions and know a little bit more about what our balances are. So for instance, if I wanted to open this new account for, if I wanted to open the cash account, for the purposes of this class, all I'm doing is I'm writing cash and then the account number over here. So our cash account number is 110. All right. So as we go through this, like chapter 4, we're taking all the information from the 5-column journal and we're posting it into these individual general ledgers, and that's like part of the accounting cycle. Every time we have an accounting cycle, we post our journal entries, we post the general ledger, and then we're going to create a trial balance and then move on to making financial statements. Okay, that'll take us through the end of the year to figure out, like, to learn how to do that. The biggest thing with general ledger accounts is just like really going through each step, checking off each step, and then going, moving on to the next one. Okay, you want to make sure you're very specific and detailed when you do it. You don't want to be like, oh, I'll do this part first. Like, go through the procedures in the order they're intended, because that'll make finding errors